I'm with Amarillo Gold. We're building Brazil's next profitable gold mine. Of course, I will be making some forward-looking statements this morning, so you should rely on your own research. Amarillo Gold, we have two gold properties in Brazil. We have our ROSA property, which is our development property, but it has significant exploration upside. We have 1.6 million ounces of open pit reserve at 1.3 grams per ton. And we have an additional, we're open along a 12-kilometer trend. Our current open pit plan takes up about 800 meters of a 12-kilometer long trend. So we'll be exploring north and south of the current planned pit, looking to extend the ore reserve along trend. We're in the mining-friendly state of Goiás, Brazil. We're about a 4-hour drive from the federal capital of Brasilia. Goiás state is quite mining-friendly. We have the Yamana Chapada mine about 35 kilometers away. The Leagold the Leagold Pilar mine about 60 kilometers away, and the Anglo Gold Crixás mine also about 60 kilometers away. We have very good infrastructure in the area. We have power, water, paved roads right to the site. Our other property is Lavras do Sur in the south of Brazil, down near the border with Uruguay. Lavras do Sur, we have 523,000 ounces of resource on one of our 22 exploration targets. We have a 100-kilometer long trend that's centered on a large granite intrusion, been fractured and mineralized along the perimeter of the intrusion. We have 22,000 hectares of exploration ground and 22 targets in the area. ROSA is a brownfield site. The project, the ore body was discovered by BHP in the mid-'80s. They partnered up with Western Mining, an Australian company, and mined it in the early '90s. The photo you see here was taken sometime mid-'90s. We can tell that this was after they had shut down the pit, which would be the water body you can see on the right is flooded. Shortly after this photo was taken, the entire area was reclaimed. Today it all looks like the stand of trees that you see in the lower left of the photo. Again, we have 1.6 million ounces of resource at ROSA. We've turned that into a mine plan with 1.1 million ounces at 1.42 grams per ton over an 8-year mine life. We have the potential to expand the resource and the reserve both down dip and along trend. We're completely open down dip from the current resource. So we currently have a 10,000 meter drilling program going on. We're primarily focused on converting 300,000 ounces of inferred ore into measured and indicated so that we can include that in our feasibility study mine plan starting in January. We'll also be doing some step-out drilling along the 12-kilometer trend towards the end of the year. We have outstanding project economics on the property. We just did an update to our pre-feasibility study. We have an NPV5 of $244 million, after-tax IRR of 51%, and a 2.6-year payback at $1,300 gold. If you run those numbers at today's gold price, it's about $194 million NPV5, 42% IRR, and a 2.8-year payback. I mentioned we're in a mining-friendly state with other mines in the area. We have overwhelming central government and local community support. We have our first permit, the LP, which is a preliminary license. That's the social and environmental license. So we've done our environmental baseline study. We have environmental approval on the property, on the project, and we have good, strong community support for the project. ROSA is a small town of about 5,000 people. It's a brownfield site, so they've had mining jobs there in the past. They're quite anxious to get mining jobs back in the area. We're near a construction decision. We should be starting our construction in April of 2020, and then we should be pouring our first gold in mid-year in 2021. We also have an additional 65,000 hectares of exploration ground in the area surrounding ROSA. As we've heard today or throughout the course of the conference, we're one of the many companies that's significantly undervalued. We're currently trading at a multiple of about 10% of our NPV. We see our peers typically trade in the 0.4 to 0.5 range. We're also trading at a rate of $25 per ounce on our reserve. And again, we see peers trading in the $95 an ounce range. So this is why I joined the company in January. When I saw these valuations and I did my due diligence on the project, I realized that our share price can triple or quadruple in the short term and still be well within the range of our peers. Our resource and reserves, we've got 31 million tons of 1.3 grams per ton in measured and indicated for just over 1.25 million ounces. Another 330,000 ounces of inferred ore. The inferred ore lies primarily just below the current planned pit bottom. And I mentioned our drilling program. We're targeting the inferred ore, tightening up the drill spacing there to move that inferred into measured and indicated. so that it can be included in our feasibility study mine plan starting in January. Current pre-feasibility reserve, we have 24 million tons of 1.42 grams per ton, just under 1.1 million ounces in the reserve. We have very low capex and operating costs. We get assistance from the Brazilian real. The Brazilian real is quite low right now. Our study was done at 3.6 reais to the dollar. Today the real is at about 4.1 reais to the dollar. So the real has been going down recently relative to the dollar. We have a planned capex of 123 million US dollars. That's primarily for plant and equipment to build a 7,000 ton per day CIL plant. We do plan for contractor mining, so we do not have the mining equipment in the capex. We'll take that 123 million capex, we'll turn that into a 7,000 ton per day open pit mine with a CIL plant producing 144,000 ounces a year for the first 4 years, 123,000 ounces per year over an 8-year mine life. Again, our drilling is targeting the inferred ore, converting that into measured and indicated. We expect to see that mine life go up to plus 10 years. This gives us an operating cost of $545 per ounce and an all-in sustaining cost of $655 an ounce on just under 1.1 million ounces of reserve. We have very good economics on the project. I mentioned we did the study at $1,300 gold. We'd started that earlier in the year when gold was a bit higher. Today's gold price of $1,200, we've got 42% IRR, 194 million NPV5, and a 2.8-year payback. We've been told we should highlight the $1,000 case and a 23% IRR. There aren't a lot of projects out there that make that much sense at $1,000 gold. Of course, we hope we don't see $1,000 gold. Our development schedule, we're right on track where we want it to be. We've put out an update to our pre-feasibility study on September 12th. We currently have our 10,000 meter drilling program going on. We'll wrap that up by the end of the year. We'll put out a new resource update at the end of the year, early next year. We're currently out for quotation with the engineering companies to start our feasibility study in January. We plan to start basic engineering in April. Those two will give us what we need to apply for our license to install in June. It's normally a 6-month process to receive the license to install in Brazil. We plan to start construction in April of 2020 at the end of the rainy season. We have a 15-month construction cycle to build the 7,000 ton per day CIL plant. That will put us in commissioning and early production in mid-21 with commercial production 12,000 ounces per month by the end of 21. Our capital structure, we're quite excited to show the new capital structure. We've got 114 million shares outstanding. Current share price is around 28 cents, which gives us a market cap of about 30 million. We're debt free. We recently sold an NSR on the property to Royal Gold in the US. We used that to clean up a historical gold loan that had been taken out back in 2014 and was used to fund the company from 2014 to 2016. So today we're completely debt free and we're sitting with about $5 million in the bank to fund the work that we have ongoing. Major shareholders, our board and management owns about 11% of the company. We ourselves, a management group, have put a little over $3 million of our own money into the project in the last year. We recently had our first analyst coverage. Stuart McDougall from Mackey Research launched coverage on us in mid-August. He's got a 12-month target price of 80 cents per share. We can't argue with that number. I hope he's low. Our corporate summary, our next steps is to build Mara Rosa into a profitable mine with minimal dilution for our shareholders. We use the proceeds from Mara Rosa to explore the Labrador del Sur property and the 65,000 hectares of exploration ground surrounding the Mara Rosa property to grow the resource and grow the company. We've got a new leadership team. Our executive chairman joined in June of last year. He brought in a new CFO in November, and I joined as CEO in January. Our near-term catalyst, you'll see more drill results coming out between now and the end of the year, a resource update early next year, feasibility study starting in January, application for the LI in June, and then we should be ready to construct in April of 2020. So why buy Amarillo now? New management team, we've completely restructured the balance sheet in the last 9 months. We did a $5.2 million Canadian raise in March. We sold the NSR on Mara Rosa to Royal Gold for $10.8 million US in June. We used that to retire the gold loan. We're currently debt free and $5 million in our treasury to fund the ongoing work. We're advancing the project. We're doing the 10,000 meter drilling program, new resource at the end of the year, feasibility study starting next year, and we expect that we'll get that re-rating soon. We're trading at again, about 0.08 of our NPV5, $25 an ounce. We see our peers at 0.41 and 95. So again, we believe our share price can triple or quadruple and still be within the range of the peers. Okay, thank you.